Ladies and gentlemen, the stock market is bouncing back today despite the tariffs put on the US by China last night that briefly caused futures to go negative around 0.5% for all of your major indexes. Here in this video, I will give you all of your breaking news today, your major headlines, what is moving markets, where are markets at, how strong or weak are they, what the data look like today, and the data tomorrow. We also have earnings coming out here in just a few short moments that will be important, including Alphabet, better known as Google, one of your multi-trillion-dollar companies. One of the big stories today is China actually imposing tariffs on the US on certain vehicles that go to China. Now, China has long had tariffs on US vehicles. That's why GM and Ford really don't have a market in China. Tesla has a market in China because they produce their vehicles over in China. So that's not really too groundbreaking. But China did impose a 15% tariff on liquefied natural gas and coal and impose a 10% tariff on crude oil. And some on Wall Street, especially in overnight trading last night in futures markets, when futures were down about 0.5% across the board, were concerned that maybe, again, this is the start of a larger trade war like we seen in 2018. Now, it was said earlier in the day today that we were supposed to have a call between Trump and Chinese President Xi. Apparently, that is not happening now. It says here, President Trump and Chinese counterpart Xi Jinping will not be speaking on the phone today, a U.S. official said, despite an earlier claim by trade advisor Peter Navarro that they would hold a conversation. The two leaders have spoken before, but a call now would certainly center around Trump's imposition. Sounds weird saying it like that, of new tariffs on China. So this was just retaliation. But, where does this go from here is kind of what Wall Street is a little nervous about. And it is being reported that federal layoffs are likely if too few employees choose to quit. But it is being reported that the Musk buyout offer has been accepted by more than 20,000 federal workers so far, with that number climbing as we head closer to the deadline. It's essentially, you get like 7 months of free pay if you quit your government job. I mean, a lot of people are going to take that. Now, Jerome Powell will deliver a semi-annual monetary policy report, and Powell will testify before the Senate panel on February 11th. So just here in the next couple of days. And look at this. Yesterday, Fed Bostic says he wants to wait a while before the next Fed rate cut. But then he says today, were it not for housing, might already be at inflation target. Stable housing has many benefits, including for Fed policy. Now, this is interesting because for the first time last quarter, you actually had year over year market rents negative, which hasn't happened since Q2 of 2010. This is a strong sign that the housing disinflation we have seen in the last couple of months is likely going to continue. And as we get new inflation reports that continue to show progress on shelter, we will start opening the door again for rate cuts. And I think that is when you actually see 10-year Treasury yields come down in a more material fashion. Now, 10-year Treasury yields today are falling. Okay, bond yields are down about 2.5 basis points, down to 4.52%. I do think a pretty critical level here for 10-year Treasury yields is 4.5%. If you can break below 4.5%, you could see bond yields start to really tumble. And the news today that caused bond yields to fall was the economic data. Okay, so JOLTS job openings came in today well below expectations. JOLTS job openings were expected at 8 million. They fell to 7.6 million. So I do think that is a big contributor to causing 10-year Treasury yields to fall, because essentially the more job openings you have, likely the stronger the labor market is. Okay, you normally are not looking to fire people if you're looking to hire people, right? Just a general, principle. If you need to hire 10 employees, you're not going to let 5 of them go, right? You're looking to hire people. You're looking to add people, not fire people. So the more job openings we have, generally speaking, the stronger the labor market is. The lower the job openings, the faster the decline of job openings, the weaker the labor market may be. So today, not the greatest data on the labor market, to say the least. Factory orders month over month came in at negative 0.9% versus expectations of negative 0.7%. So factory orders weaker than expected. JOLTS job quits coming in at 3.197 million. Versus expectations of 3.1 million, so about 100,000 higher than expected. The RCM TIPP Economic Optimism Index came in at 52 versus expectations of 53.0, so also missing expectations there. Again, we had a speech from Fed Bostic today, did not get much out of it besides the comments again on shelter. And then Fed Daily also spoke today. At 7:30 p.m. Eastern Standard Time tonight, we will get a speech from Fed Jefferson. And then tomorrow, we will get the ADP employment change, the ISM services PMIs. About 80% of the economy is services. 75-80% of the economy is services. So this data is more important than the manufacturing data, especially in terms of inflation. And the big component here tomorrow will be ISM services prices, where prices in the ISM services report have really skyrocketed recently. If you see those come down, that's going to be good for markets. That's going to push 10-year treasury yields lower. That's going to alleviate some of the inflation concerns. Tomorrow, we do get Fed Goolsbee, Fed Bowman that will speak before markets close. And then again, in after hours tomorrow at 7:30 p.m., you will get a speech from Fed Jefferson. Here today in after hours, you do get earnings from AMD, Alphabet, better known as Google, Snapchat, Chipotle, Enphase, Amgen, EA or Electronic Arts, Lumen, Prudential, and Juniper. So Google, one of your multi-trillion-dollar companies, by that definition, it will be important for the broader markets. Although, it's hard to imagine some kind of disaster following Meta's good earnings. Okay, could they be a little on the weak side? Of course. Are they going to be a full-blown disaster? Probably not. Even Apple, which has been under a lot of pressure recently, we haven't had good news for Apple. Came out and did okay on the earnings, and the stock even went higher. Tomorrow, you have Uber, Disney, Novo Nordisk, Toyota, Boston Scientific, and pre-market. And after hours, you have Ford, Qualcomm, ARM, Symbiotic, Viking Therapeutics, O'Reilly Auto Parts, Align, and Aflac. Thursday, you have Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol Myers, Tapestry, Yum, and Philip Morris. And then Thursday and after hours, you have Amazon, your other multi-trillion-dollar company, reporting earnings this week. Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest, MPS, and Powell. So earnings season, it's not over yet. And then next week, you'll get a lot of your more mid-cap names, a lot of software names, and smaller cap companies. The CNN Fear and Greed Index today really plummeted from yesterday when you were at 46. You're coming in today at 39, so definitely not an improvement here. You do have market momentum in fear, stock price strength, extreme fear, stock price breadth, fear, put and call options, fear. Market volatility is neutral, safe haven demand in fear, and junk bond demand currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, you are actually seeing a more broader based recovery today. About 4% of stocks are breaking above their 50-day moving average. You're now sitting at 45.55% of stocks above that 50-day moving average. So you still have 65% of stocks below their 50-day moving average. This is not a great market, but you are seeing a little bit of an improvement today. Now, Atlanta Fed GDP Now tracker, we should have a new update for today. Doesn't look like it has came out yet. Last update we had was 3.9%, which is a far distance away from the blue chip analyst consensus of about 2.3% GDP for the current quarter that we're in. That is Q1 of 2025. So let me know what you think about all of this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.